Hi everyone, welcome back to Accountant's Desk. In today's video, we are going to learn about prepaid expenses, accrued income, and deferred income. We will cover the meaning, journal entries, and examples so that you can understand it clearly. And if you are a small business owner looking for bookkeeping services, fill out the Google form from the description and we will reach out to you. So let's begin. Prepaid expenses. Paid in advance, benefit later. Prepaid expenses are the advance payment made for goods or services that will be received in future. They are recorded as an asset and expensed gradually since the benefit is yet to be consumed. So, they are recorded as an asset and later when the benefit is consumed, the expense is recognized. Example: insurance premium of rupees 12,000 paid on January 1st for the whole year. Cash is paid on 1st Jan. We have taken the insurance and we have paid on 1st Jan and benefit we receive throughout the year. It is 12 months expenses that we have paid in January. Let's see how we'll pass the journal entries. Journal: at the time of payment, that is 1st Jan, prepaid insurance account debit 12,000 to cash or bank account 12,000 rupees. Prepaid insurance, it is an asset and asset increases so it is debit, and cash goes out of the business and it is asset. Cash decreases, so it is credited. At the end of each month, as expense is recognized, insurance expense account debit 1000 to prepaid insurance 1000. Expense is recognized and asset decreases, so insurance expense account debit to prepaid insurance account, and expenses goes to P&L account. Accrued expenses, outstanding expenses. Expense incurred, cash not yet paid. Expenses that are incurred but not yet paid by the end of the accounting period. Liability until settled. They are liability because payment is pending. Example: salary of rupees 5,000 is due in March but not yet paid. Benefit is received in March and cash paid is later. Here we have incurred the expenses in one accounting year and we are paying it in another accounting year. That is, we should pay the salary before March, that is before accounting year end, before March 31st. But we are paying it later after March 31st in the next accounting period. So let's see how we'll pass the journal entries. Journal: when salary is incurred but not yet paid at accounting year end. Salary expense account debit 5,000 to outstanding salary account 5,000. Salary is an expenses and it is debited. And outstanding salary it is liability. And as the liability increases, it is credited 5,000. Salary expense is recognized in P&L. And outstanding salary, it appears as a liability in balance sheet. When salary is actually paid later, outstanding salary account debit 5,000 to cash or bank account 5,000. Now after paying the salary, liability is cleared and cash or bank account, it reduces. Accrued income: income earned, cash not yet received. Income that has been earned but not yet received in cash. We have provided the services or we have sold the goods but we have not yet received the cash. Recorded as an asset. Example: interest income of rupees 2,000 earned in December but not yet received. Service or interest earned in December. Cash received later on. Interest income of rupees 2,000 we earned in December but we have not yet received it. We will receive in the future. Let's see how we'll pass the journal entries. When income is earned but not yet received, accrued income account debit 2,000 to interest income account 2,000. Accrued income, it is an asset and asset increases so it is debit. Interest income, it is an income and income increases so it is credited. When the income is actually received later, bank or cash account debit to accrued income account 2,000 rupees. Accrued income asset is cleared and cash or bank account balance increases. Deferred income, also known as unearned income. Cash received in advance, service pending. Income received in advance for the services that is not yet provided. Treated as liability. Since the service is pending, it is treated as a liability. Example: rent received in advance of rupees 6,000 for next year. Cash received, that is now, and service we will be providing next accounting period. Let's see how we'll pass the journal entries. At the time of receipt, that is current year, December 2024, cash or bank account debit 6,000 to unearned rent 6,000 rupees. Because cash is an asset and asset increases, so it is debited. And unearned rent, it is liability. Liability increases, so it is credited. In the next accounting year, that is January 2025, when rent is earned, unearned rent rupees, unearned rent debit 6,000 to rent income 6,000. Now liability decreases and income increases. So that's it for today. If you found this video helpful, do like, share, and subscribe to Accountant's Desk for more accounting tutorials. And if you are a small business owner looking for bookkeeping services, fill out the Google form from the description and we will reach out to you. Thanks for watching. See you in the next video.